Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this time around, this video corresponds to one auto ancillary company which has done extremely well over the last 3 4 years in terms of numbers and the kind of business that they are doing, and it looks like a very good long term bet if you want to buy into a mid cap stock. In my opinion, it is one of the leading companies in this segment, but again, do your own analysis. So let's start with the disclaimer. So first of all, a disclaimer that I'm not a member of the NSE and BSE, and this is not a stock recommendation. Whatever I'm discussing in my videos is purely on my analysis and on my knowledge of the last 10 11 years being into the market. I'm not a member of the NSE and BSE. I'm not certified to give stock advice or any of that sort. So whatever decisions with respect to investments you take, kindly take that on note that it is laden with market risk, and market movements can jeopardize your returns when you put in the money from shorter to longer period of time. So kindly do consult your financial advisor before taking any call. So before I talk about this company, here's a small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts on companies, on markets, on how their earnings have been, updates on different stocks, companies, and discussions on domestic and global economy. And you can ask me any number of queries in there with respect to markets when you become a member on Patreon, WhatsApp, or on YouTube. How to understand about this company, let me take you to the screen of website. So the company in question in here is Minda or Uno Minda, and this company has done exceedingly well. Current market cap, I'm sorry, current market cap is around 38,000 crores or so, trading at around 650 rupees, and has come down 660 rupees, and has come down a little bit from the top of 695 700. So let me just dive down as to what the company does per se. So in terms of business overview, company is a manufacturer of automotive switching systems, automotive lighting systems, automotive acoustics. You have seating and alloy wheels. It has also built an electric vehicle specific products portfolio as well. So EV kind of products also it is building, and this is where the next level of growth would come in. So a 38,000 crore company trading at 3 times sales could easily go up going forward. In terms of the product profile, they have four-wheelers, two three-wheelers, ICE, two-wheelers EV products they make, three-wheeler EV products they make, commercial vehicles, and off-road products. So everything is embedded into a you can say a mid-cap auto ancillary company. Over the years, they have developed EV products as well over the last 4 5 years, and they have done really well in that segment as well over the last 4 5 years. They have marquee clientels in there, and let me just give you an idea of the numbers. So consolidated numbers in September, they did 3,600 crores of sales versus last year's of 2,880 or so. Again, profit jumped from 318 crores operating profit to 402 crores. That's a decent 30% jump year on year. Net profit from 180 crores has gone to 240 crores nearly. Again, a decent jump, so around 30 percent or so, more than 30 to 32% jump in net profit. And similarly, we had a situation where EPS grew from around 3 rupees to around 4 rupees, 3.9, 3.93. So what I feel is that they have done around 6,600 crores of sales in the first half. They should do around 7,400 or so crores. So around 14,000 crores, if I am not wrong, is what they can do. Around 14,000 crores of sales is what they can do this time around at 11% margin. If we take yearly numbers per se, the operating profit should be around 1540, 15 50 crores. If I take other income in here of around say 150 160 crores, so on 1540 if you add, so I'm just projecting as to how the numbers could be this year. If we you can say deduct interest as well as depreciation from that, and I'm taking yearly figures of depreciation. This first half has been around 240 let's say they do 480 crores of depreciation thing, 1020 crores before tax, and if I say 23% tax on it, so 1020 minus 235, this is what they are going to roughly come up with, 785 crores of net profit. And this is exactly what screener is projecting, so around 13 rupees of EPS. So this time around they are going to come up with around 13 rupees of EPS. Current price is around 660 or so, so it's not ultra expensive in that sense. At around 50 times it is currently trading at proportion. Why I'm saying that is the way the growth trajectory could be going forward. So if you look at balance sheet, there is no debt whatsoever. If you look at cash flow or net cash company, in fact, if you look at reserves, 4,400 crores of reserves, which have consistently increased from 2012 till now. Tremendous firm and tremendous business that it is doing, and the potential is even bigger for the next 4 5 years. Promoter holding dropped a bit, 1.5% to 68.74. But look at the way DII and FII holding has remained, 7.8% FII, 16.97 is 17% DII holding, which who have consistently increased their holding from around 9.85% in 2020 to 17%. Public shareholding has decreased, so 6.5%, which is extremely good, considering the fact that if around 93% of the holding is with the strong hands, very little chance of the stock crashing. That's my understanding. So very decent company, numbers should improve going forward with the EV segment and all. So in my opinion, at around 38,000 crores at such market cap to sales, and if they do 14,000 crores of sales, then you can see that the market cap to sales is around 2.7 times forward. So on FY24 basis, 2.7 times sales is not that expensive. If I take the PE valuation also, over the last 3 years or so, the PE exploded earlier and then came down. So an average PE is around 66. The stock is trading around 50, which is going to reduce say 2 years from now on current earning, on current price. As the earnings expand, the PE should be around 40 45. And in terms of market cap to sales, we are at 2.7 times sales. On an average, it's around 3 times. So we are just below average. So the stock is looking extremely good from 2 to 3 years perspective, as well as from 5 years. So anywhere between 3 to 10 years, one can look at it, keep analyzing numbers, and then take a call on it. Again, do your own analysis on the same. So this was my video on Unum India. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot.